We are casually allowing all of these things to happen under our nose right now. And many of us, in the spirit of building wealth, are actually directly responsible for it through our investments.
Wow. Welcome to the Rich and Regular podcast, where we explore life at the intersection of money. I'm Kirsten.
And I'm Julian. And today we are talking about impact investing.
Yes, investing for impact.
I love that. First, got to give a shout out to Britt. That's Britt with 2 T's. She's part of our Spotify fam. She left us a comment on episode 200 and said, congratulations on this awesome achievement. Thank you, thank you, thank you. And thank you for sharing these tips. I've gotten back into content creation after being one of those people that quit on their podcast. I forgot what you said that number was.
I don't remember.
It was like something like most people quit after like 8 episodes. She's one of those people.
She's back.
But she's back, and she's basically pouring back into it. So we appreciate it. She says she appreciates the honesty and valuable advice per usual.
Yes.
I didn't know more people other than your brother-in-law said per usual. He's the only person that I knew.
So you know Britt working corporate.
Oh, is that what it is? Per usual, per my email. This episode is going to be published on the last day of Black History Month, 2025. The last Monday of 2025 Black History Month. And I got to tell you, this has probably been without question, the least memorable Black History Month in my life. I don't remember anything. I don't think we did anything. I started to like pull back from Black History Month a few years ago. And it's interesting because, you know, and I think we'll talk about this, but like it makes sense. There's a reason why we're talking about it. I just feel like it's without question become very much a commercial holiday, which is interesting because it's not even like it's a huge driver of sales. It's just
nobody's doing a Black History sale.
No, I'm sure someone is, or a handful of people. But all that to say, it's interesting and it has relevance to the context of the conversation that we're having right now. Because what I do find to be interesting is that right now there's a lot of conversations with respect to resistance, right? Donald Trump is back in office. He is without question shaking things up. And as a result, the opposition, the Democratic Party, is resisting in many ways. But what's interesting about this particular version of resistance is that it seems to me as if it's coinciding with a financial enlightenment, if you will. Like, whereas before it was more like balls to the wall, let's get out, shake things up, let's protest as an act of resistance, let's become politically engaged. I think the good news is, especially for people who have been involved in the personal finance and money space for what feels like forever now, you can kind of tell that now that people have a bit more of an understanding of what to do with their money outside of just boycotting, that is now being coupled and used as a tactic for resistance. And so we're starting to see much more advanced conversations as opposed to here's what we should be doing, which is what I think we were talking about before. There were two conversations happening at the same time. Now those conversations seem to be happening together. So that to me, you know, I guess is a upside.
No, I think you're right. I think you're right about people not wanting to be performative this time around.
For sure.
And although a lot of Black history has been made this month, Black history is made every day of the year. And so if we're going to celebrate it, we should celebrate it all the time, right? And the same is true for political resistance or whatever you want to call this thing that individuals now feel empowered to do. If you can do it during his presidency, you can do it all the time.
For sure. And it shouldn't just be in opposition. It should just be part of something
in the first month or month and a half. Like it's either something you do or something you don't do. The other night we were looking at pictures from 2019-ish. Like we have the pictures up on our television. So at night we use it as a tool to refresh Bo's memory and tell him stories about himself and all this stuff. And so we were looking at pictures from 2019. And it was just like a really happy moment for whatever reason. And I just remembered like, dang, that was during the first Trump era. Like that was during that was in the middle of it. And it was a reminder that there are pockets of joy, happiness, optimism, hope in these moments, but you have to find them. You're still responsible for them.
Yeah.
And I think the other reason I wanted to talk about this is because I was listening to Kamala Harris's speech at the NAACP Awards. This was like a couple days ago.
Okay.
But she gave this very, like, Kamala style speech. It was very uplifting and optimistic and poetic. But she gets to this part where she's talking about where a lot of people are asking, what do we do now? And her response was, we know exactly what to do because we have done it before and we will do it again. We will use our power. We will organize. We will mobilize. We educate and we advocate. Just the rhythm, the poetry, the rhyme, and all there. But I always cringe a little bit because I just feel like politicians are missing the mark, specifically Democratic politicians. Republicans get this right, but they never mention our money. They never talk about our money. And so from now on, whenever you hear a Democrat or someone on like someone who's not far right, whenever you hear them talking about power, I want you to hear money instead.
Yeah.
I want you to hear, we will use our money to do this. Like, movements need funding. Change requires funding. And so if we don't talk about the power of the dollar, then we're missing the point. And I feel like we inherently know that there's power in the dollar, but we focus on our buying power instead of our investing power.
Yeah, I think it's implied, but I agree with you. They tend to miss the mark, and I believe that it has much more to do with the fact that they just aren't really savvy in those areas. Right. So it's implied. And what they're basically saying is whatever power you have, those of you who have political power, you need to be engaged. Those of you who have this type of expertise, find a way to do it. And I think that's what they're really saying.
Yeah.
But I do think that there's a lot of value in being a bit more specific with respect to money, because it's something that everybody has. It's a resource. It's not necessarily a power in the same way that a skill set might be. It's a resource that every single one of us has, both as consumers and investors. And we're going to talk about that because that's really at the heart of what we're trying to, one, educate, but also raise awareness of this idea of impact investing.
Yeah. So I'm bringing up the fact that a lot of us are thinking about our dollar in terms of spending power and buying power, because that's exactly what I'm seeing. And I'm seeing it both anecdotally, just in posts, and I'm seeing it in the data. So this is a anecdotally driven rant here.
Oh, well played.
Yeah, anecdotally.
I like that.
But anecdotally, and I know I'm not the only one, I'm sure people will reply in the comments that they've seen this too, but even looking at the responses under Target's social media posts, like, it's a bunch of people talking about how they are not shopping in Target anymore. They're going to Costco. My cousins have been texting me digital flyers about days where there are like these certain economic blackouts. Like, I know there's a big one scheduled for February 28th. That one's scheduled by the People's Union, and it's gotten celebrities to talk about, like, okay, one day, America, we're going to stop spending unless it's absolutely necessary. So there's that. But, algorithms will lie to you all the time. There's also the data that shows that consumer confidence is down. So the measure of Americans' short-term expectations for income, business, job market fell 2.6 points to 83.9. And the Conference Board says that a reading under 80 can signal a potential recession in the future. It's just a possibility, not like a definite signal. On top of consumer sentiment and consumer confidence, then you have this other report that says people have slowed down on spending in the month of January. So obviously there were some extreme climate events that started our year off with snow and fires in California, and obviously that tied up people's money. But there are also retail sales that slipped. They anticipated some, but it actually slipped more than what they projected, which they call an unexpected pullback, meaning people spent less money in January than what they thought they would spend.
Yeah.
And then the Wall Street Journal comes out with this article that says the economy depends more than ever on rich people. And they reveal that 50% of the spending right now is from households making over $250,000, which is the highest it's been since 1989, which even back then, it was only 36%. So we are relying on households that make over $250,000 spending their money at higher levels than they did in 1989 to keep us afloat.
I'll tell you what, anecdotally, I would say that is true. I have a particular friend, I'm not going to call her out, but she's not doing anything wrong. But it was interesting because I'm pretty sure she was on a Disney cruise this past week. And we just finished recording that podcast about Disney. And I was like, boy, it must be nice, boy. Because Like, wow. And I know their family, they are doing quite well. That does not surprise me at all, because those
Yeah.
are the types of families who are able to do that, particularly during these particular times. But with respect to, the topic of conversation, I think what we're really trying to help people understand, connect the dots, is that there's a difference between what we can do as consumers and what we can do as shareholders. As a consumer, you're someone who has disposable income or just has the ability to make a decision about where and how you spend your money, how frequently, who you decide to give that money to, so that you can get some type of good or service to keep your lights on, or to put clothes on your back, or food in your belly, all of that stuff. But that's just one part of the coin. And I think this is going back to what you were saying about Kamala Harris, not to use her as a bad example, but more so in terms of like speaking above the issue and not really getting into some of the
Yeah.
deeper, kind of more meaningful nooks and crannies of the kind of power that we can actually employ, is to look beyond just being a consumer and maybe even holding back or pulling back, but also looking at yourself as a shareholder. That
Yes.
is such an important part of it. And again, this leads me back to that same issue, which is most people don't even know what that means, right? A shareholder. What does that mean, right? You're someone who owns shares. If you have a retirement portfolio, whether it is, post-tax, pre-tax, you own shares. You are a part owner in that company, even if you don't
Yes.
own the individual stocks, which is, again, something that so many of us miss. They feel like, well, that ain't got nothing to do with me. I own these mutual funds. I don't own Target stock. Guess what? The funds that you own, a portion of that, and it may just be a tiny percent, but it may just be like 2%, 1%, maybe even less than that. But you are in some ways a passive investor, and therefore an owner, and
Absolutely.
someone who has ownership, maybe not necessarily responsibility, but ownership over that company. So you as a result have the ability to shape that. You talked about Target, you talked about Costco. I want to talk about what this means in the context of what we've been talking about. And I'm not leading it all back to some of these issues, but to your point, there has been considerable looking at the two retailers, because in many ways they kind of solve the same problems for the vast majority of people. And I can say this as a proud Costco
Here we
shopper.
go.
I
Here we
I
go.
have a great appreciation for it, because you're also, a proud Target shopper.
I
You used
was.
to be,
Shoot. Yeah.
you used to give Target all kind of
I
free
used to
press.
work for
You used
Target.
to talk about them, work for them. It was a part of your
Fantastic
origin
employer.
story. Yeah.
Absolutely.
So here's what's happened since Target pulled back their DEI efforts. And it's not just been that, but it's been that. It's been missed quarterly earnings, and it's been a class action lawsuit that was put against them, which was directly tied to a lot of their DEI efforts. In the last 3 months, and this is as of the end of February 2025, if you look at Costco stock compared to Target stock, so Costco stock is up 6.54%, which is considerable, right? Target stock, however, during that same period of time is down 1.8%. Now, any decline is generally speaking going to be seen as bad, but that is something that people are directly correlating to a response to DEI in the moments and the times that we're in. That gets people's attention. That's
Mhm.
enough for them to say, whoa, something's going on. But 1.8% really isn't that much. Like, we generally know that, all right, well, that's something that you can recover from. Let's zoom out a little bit, because these things didn't just start happening. Once we knew that the tone was shifting with respect to all of these other issues, people started making different levels of decisions. Let's go back 6 months. Costco stock, going back in the last 6 months, is up 13.88%. Let's just go ahead and call it 14. Target is actually down 21.69%. The stock price is down almost 22% in the last 6 months. And again, this is directly tied to many of the issues that we're talking about. This is the people, shareholders,
And
investors,
consumers.
and consumers, acting as consumers and shareholders and investors, saying, you know what, this is enough. We're not standing for this. We don't appreciate this. We don't want to be a part of this. That is how you create change. Now, as of today, we do not really know what Target's response will be. I'm sure there are some things that they are going to do. They're certainly trying to promote their ways out of this by showing you commercials and letting you know, like, this will all blow over. There is only so much decline that any company can withstand before they have to do something bigger. I feel like, and I'm no expert, but I feel like 22% is enough of a dip. I mean, it's a massive amount of money to lose in market cap
in 6 months.
In 6 months. Massive. You have to make up for that like very, very quickly. Over the summer, you have to make up for that like threefold to make up for what you missed last year, and now have to make up for that in the holiday period 2025. So all of that to say, this is a great and shining example of what power actually looks like, right? This is the kind of detail that we would really love to see many of our leaders talking about. But I'll tell you why it's important. Because if you're a bank, if you're a large institutional bank, think the biggest banks you know that lend money to these corporations on a regular basis so that they can fund these initiatives. You're looking at this sort of decline, and you're starting to question whether or not Target can pay their bills, right? You've already lent them money, but you're starting to wonder whether or not you are going to have the liquidity, which is the cash on your balance sheet, to pay me back the money that you owe me with interest. Because if you didn't meet your mark, I lent you the money based on your projections. Your projections noted that you were going to have this much. You did not meet that. And now I likely have some concerns. Now, it doesn't mean that I'm not going to lend more money to you, but it could mean that the next time you come asking me for money, you're not going to get favorable terms, which means you're going to have to go back and readjust your projections and so on and so on.
And your prices.
And your prices, all of that stuff. You're going to have to figure that part out. This is what exercising actual power looks like. If you're a Wall Street analyst, you're looking at this and you're counting the weeks, you're counting the months, because you're looking at their balance sheet and seeing exactly how much cash they have on hand. And you're saying, I wonder if you're going to be able to pay your bills. I wonder if you're going to be able to pay your people. I wonder if you're going to have to close some stores. I wonder if you're going to have to reevaluate some of these future plans that you sold shareholders on. And this is at the heart of what the class action lawsuit is about. I'm going to pull a little quote. This is not from the lawsuit itself. This is from the CBS News article about the class action lawsuit. And it said, I quote, following the launch of the campaign, which was the DEI campaign, or the Pride LGBTQ campaign that they did, the retailer saw its worst performance and longest losing streak in 23 years. Mm-hmm. Worst performance and longest losing streak in 23 years, with Target stock plummeting and $25 billion in shareholder value erased over 6 months. Like, that is real money.
And to be clear,
for one company to absorb.
And to be clear, it wasn't just because they had Pride merchandise. It was a combination of boycotts. The conservatives boycotted the fact that there were Pride items in the kids section and throughout the stores. And then when Target pulled some of those items and changed their merchandising, the gay community also boycotted. So you had two different identity sectors that were like, well, then who are you for? Right? Because if you're not for me and you're not for them, right? Then come January of this year, they decide to pull back all of their other DEI efforts. And now you got Black folks and other people of color who are just like, well, now you're not, like, who are you for? Who are you for? And this is kind of where we are with the relationship with companies and our consumers. We feel like these companies owe us something in terms of all of the support that we've been giving them in terms of our dollars. And whether they agree with us or not is what the next few years is going to determine. But to know that you have that kind of power, both as a shareholder and a consumer, is something that you need to know going into the rest of this year.
Yes. And I think the final sort of wrap up that I'm trying to convey here is around power and how that power is exercised. And I think, going back to the context of Black History Month and historically how we've been able to do that, obviously there's the Montgomery bus boycott. There were several other boycotts, but it in many cases, the boycott is seen as the go-to economic exercising of power, right? Mm-hmm. But what I want people to understand is that a boycott, as I'm thinking about the way that our son is raised, right? A boycott is the equivalent of saying, go to your room. Mm-hmm. A boycott is saying, go stand in that corner and think about what you did. And when you're done, I want you to come back and explain to me, and you better have a damn good explanation for why you did what you did. It works in the short run. It's enough to get that person, that child, that company to say, all right, man, I'm sorry, right? Like, you slapped my hand.
We're still friends, right?
I get it. We're still cool. You still love me, right?
Yeah.
And I do. At the end of the day, I'm not going to, you're going to get dinner. You know what I mean? You can still have dinner. I'm still going to hug you. Good night. But I want you to go sit and think about what you did. Mm-hmm. When you start to mess with the stock, when you start to divest from the company, sell the stock, when you start to sell the mutual fund that holds the stock, That is the equivalent of saying, you know what? I ain't even got time to slap your hands. I ain't got time to yell with you. I'm going to go tell your daddy. And your daddy is an institutional investor. That's BlackRock.
Mm-hmm.
That is
Vanguard.
Vanguard.
Mm-hmm.
That's State Street Corporation. That is Capital World Investors. These are institutional investors, big, big, big companies who sell mutual funds to people, who sell pensions to companies and organizations that hold and rely on target stocks so that they can make some money and also fulfill their financial objectives. Those companies are giant shareholders of Target. So we, as individual stockholders, you might own a little bit, maybe 1,000, doesn't matter. It's nothing compared to what large institutional investors hold. And so when you start to mess with their money and you say, you know what, I'm not even going to talk to you. I don't even care what Target has to say. I'm going to go tell your daddy. I'm going to go tell the institutional investors how I feel by selling their stock. They're the ones that can go to Target and say, look, man, y'all got to figure something out or else.
Yes.
It's a wrap. And that's what impact investing is all about. This is how you create change that you can see almost immediately.
Yeah. Yeah, I think it's easy to hear those names like BlackRock and think, well, they're evil too. And it's like, well, yeah, but at the end of the day, these companies, these institutional investors, these firms, this is not about morality. They don't all care about morality. If you do want the ones that care about morality, then you absolutely need to get into impact investing. But this is about risk. They absolutely care about risk. And to Julian's point, when they borrow money from these banks, when they make certain investments with our money, they're expecting a certain return. And if the risk is that that return isn't going to be there because the product, the service no longer serves its core consumer, then that's a problem for them. It creates several downstream impacts. And at the end of the day, their survival is on the line as well. I think we bring up all of this because, one, if you don't focus on financial literacy, if you don't focus and really try to improve your financial literacy, it's really easy to think that money moves in ways that we can't influence. And that's just not the case.
Yeah.
A lot of us grew up with this idea that big money decisions happen like far above our heads, right? The markets, industries, corporate strategies, all of this stuff is dictated by billionaires, hedge funds, the Illuminati, Scientologists, whatever you believe in. It's not you. And that's just not, I mean, to some extent, that's true.
Yeah.
But for the most part, markets are made up of millions of people making daily choices. And the stock market in and of itself is not just billionaires. It's retirement accounts, pension funds, and everyday investors just like you and me. As a matter of fact, CNBC just quoted that retail investors, meaning regular people, now make up 25% of all stock trading. 25% is enough to sway a valuation and a trend. So it's not the same mix as it used to be. We actually do have some power to influence these institutions, these companies, but you have to think beyond just being a consumer and not spending the same way. You also got to think about investing.
Yeah, for sure. And, I'll go so far as to say for those who do know but don't make those decisions to invest otherwise, in many ways, you are complicit in your inactivity is just as powerful.
Correct.
Your willingness to ignore it, to convince yourself that you're not savvy enough to look inside the funds that you own, that you rely on, as an indicator or of your own involvement, in some of the horrible things that we're starting to see that these companies are doing. This is a part of the issue, and I get that doesn't feel good, right? Because there are tons of people. I'm willing to bet. You ask that question, all the people that said that they're boycotting, that they're not going to shop on that day. Ask them how many of them know whether or not they are actually invested in Target, and I'm willing to bet most people wouldn't even know. Right. But that's what you would do. If you own a total stock market index fund, you're likely an investor in Target. And so kudos to you for not buying, your popcorn or whatever it is that you buy this month or on that day.
Or
but
if you're a
you're
teacher
still
or any
involved.
public servant, like you're likely your pension,
You're still
your
financially
retirement,
tied, reliant, and in many ways funding the same oppressive issues that you are somehow misaligned with. You know what I mean? And so this is a part of the compromise that you have to make when you're part of a capitalistic system. We talked about this to a small extent back in episode 70 on ESG investing. So this is a bit of a continuation, and I think a bit of an opportunity to put it into context, given some of the issues that we're talking about now. And over the next couple of weeks, we'll be talking a little bit more about this issue. We've got a really exciting project we'll be sharing as well that we're near the end of finally being able to present to you guys. But this is a very big conversation. And so, again, I'm glad that all of these conversations about resistance are happening right now. I'm more glad that more of us are starting to wake up and realize the power that we have, whether we are being active or inactive in this particular moment, because it's something that I think once you become financially aware of the role that you play in it, it's such an it's disorienting at
Oh,
first.
yeah.
You may feel a little dirty. Um, and that's understandable. There are a number of ways. I'm not here to judge, anybody's decisions, but I definitely want us to understand that we do play a role. There's more that we can do than just deciding not to shop somewhere. And especially if you're that upset, if you're so upset while also being an investor in those companies, that to me is not necessarily a conflict of interest, but it's certainly misaligned with your values. And so I want people to know that they do have choices and there are ways to get their attention above and beyond deciding not to buy something for a short period of time.
Yeah. I love that you mentioned the fact that we've talked about this before, because we did. We talked about impact investing, which at the time was ESG, which was, even that was an evolution of what it used to be called.
Yeah.
This was back in episode 70, which I'll link in the show notes. But it's continued to evolve. It's continued to grow. It's continued to reshape itself. And it is a little uncomfortable, especially if you're dealing with misconceptions or myths or beliefs that might be from 10 years ago or even 5 years ago
Yeah.
around what impact investing is. There was a time where it was a very niche concept and it was mostly focused on environmental and like sustainability work. It was not socially geared or
No.
even focused on other things beyond just,
And in fact, I want to say it was more so like they would just call it like green investing.
yes,
It started with just the environment and climate change in mind. And over time, people started to realize the connection here. Like, don't spend all of your days focusing on women's rights, but then being a stakeholder and an owner in companies who openly, support companies or politicians or policies that continue to oppress women.
yeah,
You know what I mean? Like, it's like all of these kinds of things and tying them together. And that from that came an opportunity to expand
correct.
your investment opportunities and say, look, it's just not enough.
Yeah,
It's not enough anymore, I should say, to just, be a hashtag activist and to black out your social media one
yeah,
day while also being an investor and an owner in the same company. Like, you almost sound silly. Once you
yeah,
know and you realize that, you recognize, for lack of a better word, the hypocrisy in it, because there's a moment where you truly are ignorant of it. You don't realize that role. And I'm willing to bet that a lot of people are realizing, like, wow, I'm one of those people. Like, you're one of those people who are upset, vocal online, but have no clue that you're actually also invested in this. I'll give you the last example here, because this is the one that I think fewer people can specifically relate to, but you can likely understand how horrifying that might be. Let's say you were one of the people who've been unfortunately affected by a school shooting, or someone, or your community is one that's been affected by that, and you're horrified because that's such a jarring experience. I've never even been remotely close to that. I hope I never am. But if you are vocal about gun rights and then also an investor in companies that buy, sell, and produce guns,
yeah,
that's a gross feeling, right? And I think that's what we're trying to get people to realize. Whether we're talking, like, whatever the issue is, right? Part of the solution in terms of creating change, not just for your individual life, but also for your community and society as a whole, is recognizing the role that you play in upholding the status quo.
yeah,
And that's what this is really, really about. And so I'm actually glad that it has expanded, because through those investment opportunities, it's forced people to have far more comprehensive conversations about not just returns and cost and, long-term projections and the amount of wealth and money that can be built, but helping people understand the role that they play in keeping all of these things going.
yeah,
Because I know people who are so upset, about all of these issues in the world, but at the same time completely oblivious to the fact that they are invested in the same institutions that they're fighting against.
Yeah.
It doesn't make any sense to me, but I empathize because I realize that many people have not amass a certain level of financial understanding or awareness around the role that they play. And so hopefully, like I said, this episode helps people to say, I never thought about that.
I mean, I was one of those people
No,
up
for sure.
until
That's
last
right.
summer.
Right.
Like, and even now, like it is a true process of unlearning. There is a lot of bad information, old information, just pessimism, whatever you want to call it, that was baked into my own brain. But then last summer, I enrolled in what's called an Invest for Better circle. And long story short, Invest for Better is a nonprofit that is focused on teaching women how to do values aligned or impact investing. And I actually met the co-founder of Invest for Better, Janine Firpo, at FinCon after she was introduced to me by Gigi, who is the host of the Progressive Pockets podcast. Shout out to Gigi.
Oh, she changed the name, right?
Yes, it used to be Spin something
Yeah, it was
Invest. It
something,
was something.
something I knew.
Yes.
Okay.
But she changed it to Progressive Pockets last year to capture more so what the show is about, which is this stuff. It's about how to use your money to make an impact. Anyway, I could do a whole podcast on just how fascinating both Janine and Gigi are. But long story short, Janine extended me an invite to a circle, which is basically this cohort-based 12-week program. It's a combination of self-led and peer-led discussions about values-aligned investing. And it's not just stocks. She goes through everything from where you bank to private lending to angel investing, all the different ways that you can use your money to make an impact. And it was eye-opening for me. I told her right afterwards, I did not expect to feel that convicted, because for a long time, I was a person who believed that, yeah, this is something we should be conscious of, but it's not something that I should lead the charge on. I'm not a billionaire. I'm not someone who, needs to right these wrongs. Why is it my job? But it really changed the way that I think about my values and what they actually mean to me. Like, what does it mean when I say that I'm this type of person? And then what is the evidence of that belief? And it was just truly eye-opening. And the best part about it is it was done in a group setting. So it wasn't just me having these realizations. My group, my teachers were a woman who retired from a government program, and then another woman she's a mother of a small kid. Like, she's just involved in nonprofit grassroots organizations. And it was perfect. Our group was a mix of people, and we just all went through these realizations together, where it was like, dang, I didn't know I was funding private prisons and guns and food deserts, all kinds of stuff. And there's just something to giving yourself space for these realizations, but then also giving yourself permission to move past and use the information that you have to do something better. That's the point. Invest for better. We're not saying that you have to be a full purist. We're not saying that you need to flip your whole retirement account, although some people have. My teacher did. But there's a lot in between that you can decide from and learn from and act on.
Yeah, you're actually making me think of, I don't remember what it was called, but it was the last series. I'm a big fan of The Best Man. And there was a portion in the last series. I think it was like on Peacock. It wasn't an actual movie. It was like a series that they did. And I think it came out like 2 years ago. And the Nia Long character, Jordan, there was a guy that she liked and she, was really feeling. And then she found out after doing some Googles that he was a primary investor in like privatized prisons.
Yes. I remember
that was enough for her to be like, I can't do this. I can't date this guy, because it was misaligned with who she believed she was. Like, it was something that, as much as everything else was great, she just couldn't look past it. And I thought it was such a brilliant, creative way to include that tidbit into the story. And I remember at the time thinking, like, why would they choose to do that? But I'm always like kind of really intrigued as a creative person, like when they find little ways to do that. Grey's Anatomy used to do that. Shonda used to do that all the time. Like, you could always tell what was happening in the news because somebody would come into the emergency room and be like, what's their story? It was like, oh, well, you know what she was really talking about.
Well, people do this now. They just do it at like petty levels or surface levels.
Yeah.
So I know there are absolutely people who will not date those who vote differently than them.
Oh, I get
But
it.
there are also people who won't date people who eat differently than them. Like, I got a homegirl who broke up with a man because he ordered a Sprite at dinner. And she was like, that just tell me everything I need to know. So we make these leaps. I'm not going to tell you who it is either. We make these leaps, but this is asking us to go a little further beyond just the short term. Like, what are you funding? If you knew that your money was shaping the world, what are you funding? And we've seen how we galvanize when it's something that we want, when it's Kamala Harris as president, when it is, a Black owned business on a shelf. But we also need to galvanize and organize and mobilize when it's something we don't want.
You forgot advocate. I think she threw advocate in there.
I
wanna wrap up real quick because I want to talk a little bit about the circles, because there was a layer to your learning experience that I really appreciated, which is that I didn't have to do any of it. Like I just you would go downstairs and sometimes be upstairs, and then I would just know, I was like, oh, I didn't even realize you were doing it today. I just thought you would talk to your friends.
Which and I
was. I know, but that to me, as the other person in the house, like that to me was something that I actually appreciated, because I know what it's like to like grind. It was bringing me back to like my grad school days and how like painful that learning experience could be. And this seemed to be one that was more like, hey, let's just, let's talk a little bit.
Yeah.
Let's pour some wine. Let's have a conversation. Just talk a little bit. Did you know? Let's talk about these issues. What about you? And, it's people from all over the country. Like, I thought it was like a really cool learning experience. And so like, that is something that I really appreciated about it. And I would imagine what it feels like is something that someone who might be interested would be thinking like, all right, well, what does that experience look like? But in terms of like my motivations, I've spoken a lot about where I am as a father and as a parent right now. And that to me is actually one of my biggest motivations, because I'm starting to realize just how wildly intelligent our son is. And I tell him all the time. And of course, he loves it when I tell him, I want to be stronger than you. I'm like, you're going to be stronger than me. You're going to be faster than me. You're going to be richer than me.
Yeah.
But he's going to ask me like really challenging questions. And I'm really mindful. Like, I know I'm not going to get it right, but there are certain things that I just do not want to get wrong. And I know he's going to ask some questions like, well, what were you guys doing while all this was happening? Because like his generation is going to be dealing with some pretty bad things. We don't quite know what those things are. We have a general idea. And you don't want to be the one to be like, yeah, well, I just, I wasn't paying attention to it.
Just the way things were.
Because that's exactly what it is. We have our examples of those things now. Like we passively talk about how women were not allowed to open bank accounts until, unless their husband was there, like until the 60s. And we casually talk about what it must have been like to live through segregation and Jim Crow. And I think our generation looks at our parents' generation and our grandparents like, that's crazy. Like, I can't believe y'all allowed that. Y'all, man, it wouldn't have been me. Bullshit.
Right.
Because this is us right now.
Right.
This is us. That's the show that we're in right now. You know what I mean? And so we are casually allowing all of these things to happen under our nose right now. And many of us, in the spirit of building wealth, are actually directly responsible for it through our investments.
Wow.
And that's the answer that we're going to likely try to skirt around while we're talking to our kids 20, 30 years from now. And they're not going to let us do it.
No.
They're going to say, actually, no, I don't want this house. I don't want your money. I don't want any of this stuff, because I know it directly has something to do with these issues that my generation are now having to deal with. It's not real anyway, to your point. The future that they're having is being built with the returns that we are enjoying right now. So no, they're not going to want to live in that house. They're not going to want those things. Like, what they're going to want is something that they actually value, something that they take pride in, something that doesn't make them feel bad.
Right.
Nobody wants to know that they live in something that was built with blood money. And that's low key what a lot of these kids are going to be questioning years from now. Fundamentally believe that. And so for me, that was one of the big motivations. And I think it's one of the downsides to passive investing. As much as I'm a big fan of the approach, I think there's a level of ease and simplicity in that approach, but it also means that you're willingly turning a blind eye to the downstream effects. And if with those returns you use it to create change, more power to you. That's basically what we've been doing. But now we're realizing there are other tactics that we can do as investors to ensure that we don't just fund our retirement, but that we shape the future in a way that we want it to be built. And I think that's what this opportunity presents. And so no different than I would tell my son right now as he was talking about how bored he was or how angry he was. I was like, that's an opportunity. If you're angry and you're frustrated right now with the world, don't run the same play that we did last time the administration was put into office and spend all your time complaining on social media. That's actually not enough. And it's proven to actually not be effective because he was reelected.
And he bought all the social media.
And then he bought all that stuff. And now the media is actually complicit. And if you do complain about it, it just gets suppressed. So it doesn't matter anyway.
Yeah.
That doesn't happen with your investments. You want to create change, move your money. Watch what happens. Watch how they respond. And that is really, without question, the most effective. Take away one of the biggest accolades that he wants to take pride in, which I guarantee you, the biggest brag bag you can imagine is getting ready to drop. And half of it's going to be wrong. You're already starting to see, criticisms of like Doge and all the reports and stuff. But like you're about to see like the craziest irrational brag bag ever. But he wants to rest his hat on the fact that the stock market boomed. And I'm telling you, you can empower corporations to give them a reason and an interest to fight back. Right now, they're not fighting back because we're saying it's perfectly fine. We're accepting these returns. We're not doing anything about it. And everybody seems to be happy on paper. You move your money, watch what happens.
Yeah. And we don't mean move it to like a savings account with a 1% interest rate. We're talking about move it into somewhere where you can make money and make an impact. That's inherently what impact investing is. It's not charity. It's not giving up profits in order to do good. It is a world where the companies and the institutions that you invest in are also committed to doing the right thing with your money.
Yep.
And there's so many options out there. There's too many for us to do a full podcast on. But like I said, we'll be talking about this for the next couple of weeks. And there are these Invest for Better circles that exist specifically for women that give you a community to learn this stuff with. Now, for the first time ever, Invest for Better has designed a circle that is specifically for Black women, taught by Black women, written by Black women. Like it's a whole revamp of the existing curriculum with a little twist that's specifically for us. These circles are called Shifting Wealth, Shaping Futures. The information about when they launch is going to drop in the next couple of weeks. But for now, there is a wait list that you can join. I'll put the link in the bio so that you can join it to hear more. If you are not a Black woman, but you're still interested in a circle, you can join a regular circle where there's a mixed crowd. But this one is specifically for Black women. So you can sign up for either one of those things. Join the wait list using the link in the bio. But at the end of the day, I think this is really about being open to learning something new. Right? This is really about recognizing where we are and that whatever got us here isn't going to get us to the next place, and that we are all responsible for changing something about the way that we do. Our money is not neutral. Our investments are not neutral. And now is not the time to continue to believe that.
I love it.
All right, y'all. Well, thank you for listening to another episode of the Rich and Regular podcast. If you like what you heard, let us know by moving on down to the comments or the rating and review section to let us know. Leave a 5-star rating and review on your favorite podcast platform. And we will see y'all next week. If you like videos like this and want to see more, make sure you click subscribe and turn on notifications.